Hey guys, it's Steven here. This video is about the best 5 index funds for your Fidelity portfolio. Index funds and ETFs are a low-cost, simple, and efficient way to safely invest. If you're interested in seeing a comparison between the best index funds and ETFs offered at Fidelity, Vanguard, and Charles Schwab, I'll leave a link in the top right that may be helpful for you. Now, not everyone has the time or expertise to research individual stocks. So investing in index funds or ETFs gives you the benefit of strong performance, beating out 90% of actively managed funds, diversification, essential to spreading out the risk of your portfolio, and finally, tax efficiency, as index funds and ETFs tend to have significantly lower turnover than actively managed funds. At Fidelity, there are hundreds of index funds and ETFs available, with no transaction fee, commission-free trades on index ETFs and most index mutual funds. And Fidelity is a low-cost leader in these products, also offering no minimum investment index funds and several 0% expense ratio index funds. Fidelity first introduced the Fidelity Zero index funds in late 2018, so there's not enough data to draw for the returns. However, from scanning the portfolio holdings of each of the Fidelity Zero funds, we would expect a return similar to traditional index funds. Let's dive right in with number 1, the Fidelity 500 Index Fund, FXAIX, with an expense ratio of just 0.015%. The investment seeks to track the total return of the S&P 500 index. An index fund that tracks the S&P 500 is an absolute staple in any index fund portfolio. When we look at the returns, since its inception in 1988, it has generated over 11% returns per year and over 17% in the past 5 years. While past performance does not guarantee future results, the historic return is above average, which is fantastic, and historic risk is low because you're investing in big name companies. So there will be fluctuation year to year, but it is an upward trend over time. The investment style is categorized as large cap blend, meaning there are both value and growth stocks. Top 10 holdings include Apple, Microsoft, Amazon, Facebook, Google, Tesla, Berkshire Hathaway, JP Morgan, and Johnson & Johnson, all large stable companies. For a zero expense ratio alternative, the Fidelity Zero Large Cap Index Fund, FNILX, is a fantastic choice. Since its inception in 2018, it has generated over 17% per year and over 41% in the past year. The top 10 holdings are similar to the Fidelity 500 Index Fund. You are getting exposure to all the big companies that make up 75 to 80% of the total market. Speaking of total market, this leads us into number 2, a total market index fund. The Fidelity Zero Total Market Index Fund, FZROX, with an expense ratio of 0%. A total market index fund is another staple of anyone's portfolio. The investment seeks to track the total return of the entire US stock market, as measured by the Dow Jones US Total Stock Market Index. You're essentially mimicking the growth in buying a piece of every company in the United States. When we look at the returns, since its inception in 2018, it has generated about 17% return per year and expect around 11% per year historically for total market index funds. Historic return and historic risk is above average. Investment style is categorized as large cap blend, and the top 10 holdings are the same as seen in the Fidelity S&P 500 index, but with a lower percentage allocation in its top 10 holdings, and spread out over more companies. Let's move to number 3, the Fidelity International Index Fund, FSPSX, an expense ratio of 0.035% for exposure to international companies. While I have tremendous faith in the growth of US companies, many countries around the world have fantastic companies. This investment seeks to track the performance of a benchmark index that measures the total return of large publicly traded non-US companies from countries with developed equity markets out of the United States. When we look at the returns since its inception in 1997, it has generated over 6% annualized return and over 10% in the past 5 years. Historic return and risk is average and is categorized as a large cap blend. Top 10 holdings include companies such as Nestle, ASML Holdings, Roche, Novartis, Toyota, Unilever, Sony, and others. When we look into which regions of the world the equities are from, we see about 65% of the equities from Europe and 34% from Asia. For a zero expense ratio alternative, the Fidelity Zero International Index Fund, FZILX, is a choice. For number 4, we have a mixed small to mid cap index fund that is for the more aggressive or long-term investor. And if you can stomach the potential higher year-to-year volatility, this comes with a higher inherent risk with less established companies. Mid-cap companies between $2 to $10 billion and small-cap companies between $300 million and $2 billion, and the potential for higher returns with them. The Fidelity Zero Extended Market Index Fund, FZIPX, with an expense ratio of 0%. This index allows our portfolio to add more weight on small to mid-cap companies that have historically generated a higher return than large-cap funds but do have the higher volatility. When we look at the returns, since its inception in 2018, it has generated over 13% annualized returns per year, historical returns below average, historical risk is above average, and the investment style is categorized as mid-cap blend. The holdings include American Airlines, Airbnb, Whirlpool, WestRock, Snowflake, Molina, and others. Finally, we get to number 5. We have the Bond Index Fund. For the more conservative investor, or if you want to reduce the volatility of your portfolio, the Fidelity US Bond Index Fund, FXNAX, with an expense ratio of 0.025%, can be considered for your portfolio. It also has a current distribution yield of around 1.1%. When we look at the returns, since its inception in 1990, has generated over 3% returns per year and over 5% in the past 5 years. Again, to reiterate, while past performance does not guarantee future results, the historic return is average and historic risk is low. The investment style is categorized as intermediate core bond. Top issuers include US Treasury notes, Federal Home Loans, and US Treasury bonds, among others. Hope you guys found this video helpful. If you enjoyed this content, please like the video and subscribe, and hit the notification bell for more videos delivered to you. Feel free to leave any questions or comments you have down below, and you guys have a great one.